on interrelationships regarding the economic indicators, finance, and stock market. And I will dedicate some time to do some preliminary or some introduction to technical analysis through a Ask Me Anything format using charts. Okay, first and foremost, this is just a disclaimer. I'm not a professional financial advisor or accredited investor. What I'm sharing today is purely based on my experience and what I know. Everyone must know that investing is risky and due diligence is required. And please treat this sharing as a form of education or entertainment, and never ever treat this presentation or the information or details in this deck of slides as professional financial advice. All right, I'm showing this photo now of a building. Anyone can, offer any answers like what this building is? Any guesses? Anyone?
Is this
Familiar?
the Fed's Treasury building?
Yeah, correct. Thanks, Dennis. So this is in fact the Federal Reserve in US. Okay. So why is it important? Because for this okay, not this building, but the person who is making the decisions and the person is Mr. Jerome Powell, right? So he is the chair of the Fed, and all the decisions made by the Fed Mr. Jerome Powell and his team will have a great economic impact to not only US, but the world as well. Okay, so just to share for the US Fed, there are two key functions mainly. Okay, and first is to control money supply, right? And the second point is to manage unemployment or employment rate. Okay, I guess from 2023 onwards, we would have experienced some, downtime, or there is a downtrend in terms of the stock markets, right? Okay, so what actually happened? So previously for the Fed, they in fact is in charge of printing money. I guess a lot of people would know this particular function of the Fed, and because of the printing of money, okay, and printing of money is also termed as quantitative easing, right? And in terms of the Fed, another part of this in the contributing role of controlling the money supply is to adjust the interest rate. Okay, so what is the definition of interest rate? So it's listed over here, where the target interest rate set by the Federal Reserve in fact can increase or drop depending on the situation of the economy. And this interest rate will affect savings account, credit cards, and loans. So that means lower interest rate would mean cheaper loans, and they also lead to lower rates for savings products. Okay, so what does that mean actually in translation to reality? So inflation actually rises because of what? Okay, so because there is a lot of money. And when inflation rises, what would the Fed do? Increase interest rate because they need to control money supply, right? So when inflation rises, interest hike will result, and vice versa. So inflation and interest rates are actually twins. Okay. Okay, what I'm showing all of you now is the US Fed's interest rates chart. Okay, just now in the previous slide, I've shown Jerome Powell, printing money, right, using the G file. So in fact, this was the decision made by the Fed, where there is a quantitative easing, especially during the middle of the COVID period. So 2020 COVID struck, right? What happened? There was a recession immediately following after the announcement of the disease outbreak, right? So in order for the recession to improve, what they want to do is to print money so that the people have more money to spend, right? But one drawback for that, right, apart from improving the entire economic situation, is that because when more people have money, what do the business owners do? What will they, react with more money? Anyone can hazard a guess? If consumers have more money, what will business owners do? They will increase price, right? All right, because you have more money, that means you have more spending power. More spending power means you don't really care about, price increase. You're not very sensitive when you have a lot of money. All right, so what the business owners will do is to increase price, and that contributes to inflation. Okay. So now the question to all of you all is, what happens when there is inflation, right? So inflation happens during this period of time from mid of 2022, and you see there's an increase now. Okay, so can I ask you all, what happens when interest rate is raised? Okay, we just in the previous slide we spoke about interest rate being adjusted, right? So if it adjusts downwards means the cost of borrowing is lower, right? So that means people tend to borrow more. Okay, so these are the results of the rise in interest rate, because when you raise the interest rate, the cost of borrowing is higher. Okay, what does that mean? It means that the loan interest rate will increase. Interest rate. So interest rate increase, the number of loans that people want to get or businesses want to get from the bank would definitely be lesser. Because who would want to pay higher interest rate, right? For their loans. So if if that is the situation, what do you think will be the money supply in the market? So obviously, there will be lesser money in the market because personal loans reduced, loans for mortgages are reduced, everything's all reduced. So in terms of the money supply, it will be much lesser, right? Businesses will not want to borrow too much money also, because increasing debt levels is something of a taboo for businesses, right? So the rise in interest rate will then also cause the market to have lesser money. And when there's lesser money, what do business owners do? They try to reduce their price in order for people to feel affordable, and they can actually start their spending, correct? So if they lower prices, that contributes to the lowered inflation rate. Okay, so for the last point on this slide, why I indicated that the recession risk is higher. You imagine during the high interest rate periods, right? There were a lot of announcements, especially by the tech companies, uh, relating to the retrenchment, or really asking, thousands of workers, to leave the company. Why? Is because for a lot of tech companies, they are heavily reliant on borrowing, right? Why are they reliant on borrowing? Is because they need the money in order to also support their valuation. Because tech companies usually have very high or extremely exorbitant valuation because they always prop up their earnings forecast. Okay, so that's very typical of tech companies. And when the interest rate is too high, right, that means are only able to borrow a certain, or probably a capped amount of borrowings for the tech company themselves. And therefore, with the reduced money supply, okay, that would mean the company will be less inclined to ensure payouts to all their employees, and therefore they need to right size or downsize their manpower, and that would actually cause recession. Okay, and this is especially painful for the small and medium enterprises, SMEs, right? Because they are susceptible to money supply, because cash flow is very important to them. And if there is no money supply, or the money supply is in fact suboptimal, and therefore that is something that will impact the SMEs a lot, and therefore causing recession risk. Okay. So now we spoke about the interest rate hike. So how does this rate hike impact the nation, companies, and you? I think I spoke at length about companies just now. So for the nation, we think about currency, right? When we talk about interest rate hike, okay, basically there is definitely impact on the currency. So for example, during the rising interest rate, US dollars are particularly attractive. Why? Because with the stronger greenback, what it means is that the other currencies are weakened against the greenback. All right. So with that, that means in terms of the increment of the potential earnings from the US dollar itself, is much higher if I buy more US dollars. So when more people are buying US dollars, naturally the currency will get stronger, right? Because the supply is lower, right? And there's demand. So what does that mean in terms of import and export, right? So when you import, will it be cheaper? Sorry, if you are having a stronger currency, right, or you have a stronger dollar, when you buy things, will it be cheaper or will it be more expensive, right? So import means buying stuff, right? So if you have a stronger dollar, it's cheaper to buy things from the outside because the other currencies are weaker than your currency, right? But on the other hand, what is the impact to the export? It will be more expensive for other countries to buy, right? Okay, so your export numbers will then be impacted. Okay, and of course, I spoke about inflation. So when there is high inflation, interest rate will increase. When there's a low inflation, the interest rate will reduce. Okay, so that will be the main impact to the nation. Okay, companies, I shared a bit just now. So with the rise in interest rates, it means that the loan interest will increase, and that has direct impact to your debt level. Okay, so it's more costly to borrow in summary. But what about the banks? Banks are the lenders, right? So banks to the moon means they earn the most from the rise in interest rate, right? Because the main profit driver for banks is definitely the interest rate. So that's why in the past few years, the financial performance of our say our local banks, DBS, OCBC, and UOB, they are recording record-breaking profits, right? It's because of the high interest rate environment. Okay, so if you have bought into the local banks since the crash of the COVID period, right? I think you easily can really earn a lot, probably nearly 2x, right? So now, I mean, for DBS, it's like the most expensive Singapore bank stock. that you can get, and the valuation is rather high, but it's also supported with a good dividend yield also. Okay, so that is probably the strength of the banks at the current moment. Okay, so you have to remember that rise in interest rate would mean that banks will be bringing in the money. Okay, so going to the individual level, which is yourself, right? So a rise in interest rate, you can see there is a rise in the personal loan or even your mortgage loan rates also. So if you are currently a house owner, right? Basically, your loan would have increased by a couple of percentage points. Okay, but I don't think it is as high as what US is experiencing. I think it's about 7%. Right now it's already of course reduced. But definitely during that period of time when the interest rate is increased, you definitely need to pay more on a monthly basis for your housing installment. Okay, so that would be a direct impact. What about savings rate? Increase in the interest rate would mean positive increase in the interest rate, or the interest rate actually get reduced. Anyone want to share? Savings rate, did it increase? Think about T-bills. Think about your Singapore savings bonds. What what actually happened? Is it something that you are happy with or sad about? It's something that you all should be happy, right? Because the rise in interest rates would mean that our high yield savings account, like UOB One account or OCBC 365, they are giving out very high interest rates, like 4.65%. So this is really something that we have never seen before. And this is of course my first time experiencing this phenomenon. So I think it's really quite mind blowing. So savings rate is very high. What about T-bills? Suddenly, 2 or 3 years back, treasury bills? What exactly is that, right? So I guess I'm not sure if anyone bought T-bills. Anyone bought T-bills can raise your hand or heard T-bills? Yeah, yeah, all right. So 3 years back, it was the first time we heard about T-bills, and it was giving yields like it's risk free also, because it's guaranteed by the Singapore government. All right, so it's like risk free, 3.8. I think they went up to even 4.2%, right, for the 6 month T-bill, right? So that is something that we've absolutely like unheard of before COVID, right? Yeah, so the rise in interest rate will actually contribute to a higher savings rate. Similarly, for our Singapore savings bonds, so if I'm not wrong, they went up to even 3.7, right, from the previous low of 1 point something or 2 point something percent. Okay, on average. So it's really something that we should look at. And SSB, it is a 10-year bond, right? And this is something that I'm not sure if you all heard before. Some years back, they call it the yield ladder, right? So every 6 months, you buy into a tranche of Singapore savings bonds, and for the next 10 years or so, every 6 months, or if you buy in every month, because they actually do the auction of the SSB on a monthly basis. So every month, if you buy in like 10,000, 10,000 or 50,000, 50,000, 50,000, right? Basically, you are building up a yield ladder, right? So every month you will get payouts. So that was what they I mean, a lot of financial influencers, right, on YouTube, etc., they were promoting building this ladder of yield or dividends using the SSB. And one very peculiar thing, which is the CPF. Anyone knows what happened to CPF when the interest rate was raised? Did it stick to the 4% for special account? Anyone knows? Did they increase? They actually increase, right? So why the CPF can increase based on the hike in interest rate is because in the CPF formula, they will look at the average fixed deposit interest rate or the risk-free interest rate given by banks. That's one of the indicators that they look at in terms of the calculation of the CPF interest rate, right? And I believe for the interest hike period, the CPF was yielding like 4.08% for the interest rate in the special account. Okay, so that is something that we have experienced when there is high interest rate. Okay, last but not least will be the currency. So anyone knows what happened to the Singapore dollar during the high interest rate environment? Okay, so I will talk about the Singapore dollar later. So in this slide, what I want to demonstrate is the relationship between the Fed interest rate versus the inflation rate. Okay, so what you can see is that when basically the blue color line is the interest rate, okay, the Fed interest rate, and the gray line is the US inflation rate. Okay, so basically what it says is that when the inflation is going up, right? Why? It's because of the interest rate, which is low or practically near zero, right? Because the cost of borrowing is low and there's a lot of money supply. And you remember Jerome Powell actually did quantitative easing, the printing of money. So there is so much money supply in the market and everyone was spending like crazy. Okay, and that causes the inflation, right? But what happens when there is a rate hike? Okay, what happens? Which is around here. It starts to taper off and go on a downtrend. So when interest rate increases, the inflation rate reduces. And currently, we are still in a relatively high interest rate environment, and therefore inflation is currently capped at a rather low level, as stated over here. Okay, so just remember for the inflation rate and interest rate, they are inverse in terms of the relationship. So when interest rate is low, inflation will rise, and when interest rate is high, inflation will reduce. Okay, so that is about the inflation rate and interest rate. So what happens to the Singapore dollar? And I think this is particularly interesting for the locals here, right, or Singaporeans here, right? What happened during this high interest rate environment, and how did we do against the Malaysian ringgit? Anyone remember or not? I think there was even memes created for this phenomenon that we experienced previously. You all remember what was the relationship between the Singapore dollar and Malaysian ringgit? What happened?
It went up lah. So I think the highest 3.5, 1 Sing to 3.5 ringgit.
Yes, correct. Thanks,
Everybody being happy.
thanks. Yeah, man, I still remember there was even a song that talk about it, 3.5, 3.5, it was, yeah, it was quite a period I think with the 3.5 exchange rate, right? I think a lot of us actually traveled to Malaysia quite frequently during that period of time. Of course, not say extreme. I mean, a lot of Singaporeans cross the borders, right, because of this. And of course, even now, if the current exchange rate is probably 3.3, but I guess it didn't stop us. The 1:3 kind of exchange rate is just too attractive for us to ignore, right? But we all remember that the Singapore dollar, because we are pegged against the US dollar, right? So when the US dollar strengthens, right, what we do is to buy more SGD just to be pegged against the US dollar, right? And later I will talk more about the economic or monetary policy between Singapore and Malaysia. But the hike in interest rate within the US increases the demand of USD, which I spoke about it earlier, right? Because of the better returns. Think of the T bills, right? Basically, you're using US dollar to buy buy the US Treasury bonds to get the 4 point something yield, which is very attractive. So for MAS, what we do is that we are pegged against the US dollar, of course within a policy band, right? So when US dollar rises, the Singapore dollar rises and vice versa also. But we won't say we are like one to one correlation to the US dollar, but we work within a policy band where the money is being procured, or Singapore dollar will be bought from the market in order for us to be in tandem with the US dollar increase. Okay. Yeah, so Dennis, just to let you know, actually it's not 3.5. The highest that we picked was 3.57 to 1 Singapore dollar. And that happened in February. February last year, which is, I think, is over here. Okay, so we picked over here, 3.57. After that, then we went on a downhill, especially there's a huge dip during Q3 or Q4 of last year. I remember I wanted to buy more Malaysian dollar, but it's like, oh my god, Malaysian ringgit, but it just keep on dipping, and in the end, I didn't have the motivation to buy more Malaysian ringgit, right? So I would have, I mean, basically, I just missed the boat in early 2024, and it was 3.57. Okay, so you might ask why, right? So I will talk more about the monetary policy for Singapore and Malaysia. So basically, we adopt a different approach, and if compared to US, it's also a different approach. So for US, in order for them to tame the inflation rate, for the US Fed, like what I mentioned, right? The two main functions of the Fed is really looking at interest rate and then also the unemployment or employment rate. So what they do basically is just to raise the interest rate in order for it to reduce the overall inflation rate. Okay, simple as that. Okay, so they just need to keep on looking at the economic indicators and situation. Then they will just have an agreement or consensus to see whether they want to increase the interest rate or reduce the interest rate. Okay, so that's the Fed's prerogative. For Singapore, right, like what you can see in this box, one main differentiating factor is that in the traditional economics term, right, for this to happen in terms of tweaking the interest rate is always done by the central bank. Okay, so that's why it is the US Fed lah. Okay, but MAS, right, is not the typical central bank. Okay, it's a pseudo central bank because it's called Monetary Authority of Singapore. So they only look at monetary policy, right? And for the MAS, how do we tame inflation or manage inflation? Is to tweak our currency exchange rate. Okay, like what is stated over here. We adjust the exchange rate of the dollar. Why? Because Singapore is heavily dependent on external trade. So, okay, to be honest, we are definitely not an agricultural kind of nation, right? So we always import. So in order to keep prices affordable, and we are really heavy on import, naturally, the way ahead to tame inflation is just to make our Singapore dollar stronger. All right, so when the Singapore dollar is stronger and the rest are weaker, the imports will be cheaper. All right, so when things are cheaper, when being imported, can the business owners say that, the inflation rate is high, so I want to increase my prices. They have lesser bargaining power to that. Of course, we are not saying it's 100%, right? But it is about managing, right? It's not to weed out or eliminate any form of inflation or rise in prices, lah. Okay. So we just need to be realistic because the increase in our currency rate or a stronger Singapore dollar can actually manage inflation to a certain extent, but we cannot stamp out profiteering by companies, right? Then this is one way which or probably the primary way for MAS or Singapore to manage inflation by increasing or making the Singapore dollar stronger. Okay. So that is why during the high interest rate period, our Singapore dollar was actually very, very strong against the weaker Malaysian ringgit. Okay, because why? Malaysia uses price control. Okay, what is price control? Can I ask you all, can you all buy rice or oil or sugar from Malaysia into Singapore? Can you all buy? Cannot, right? You can't buy oil, you can't buy rice, you can't buy sugar from Malaysia because these are their basic necessities which is being controlled. So similarly, like the petrol, I think okay, that one is quite contentious, but this is something similar. So they use price to control their basic necessities in order for them to manage inflation. Okay, so that's why Malaysian's inflation rate is not as high as compared to Singapore and other countries because they look at basic necessities, right, for the calculation of the inflation rate. Okay, so for Malaysia, they use price control and also subsidies, right, as tools to contain inflation. So we adopt a different monetary policy in order for us to control the inflation based on interest rate. Okay, so I spoke about the nation, I spoke about company, I spoke about us, right, as individuals. What about the stock market, right? So basically for inflation rate and also the stock market, what I can say is that high inflation rate will cause what? Will cause a downturn or a downtrend for the stock market. Why? Why is it so, right? So basically, the high inflation rate will result in an interest rate hike. Okay, interest rate hike means lesser borrowings, right? So it's the same story which I spoke about just now. So lesser money means businesses are more hawkish, and when businesses are more hawkish, some can fail even, right? And with lesser borrowings means they are not possible to grow as quickly as possible. Okay, so therefore with high inflation rate, the stock market will not do well. So therefore it's an inverse relationship. And when the inflation rate is low, okay, so what you can see, the blue line over here, they are the inflation rate. So basically when it's low, the stock market will be in a bull form, right? But when the inflation is high, the stock market will underperform. Okay, so you can see especially during 2024 and 2025, the divergence is getting bigger. Because if the inflation rate is really tapering off, what you can see the stock market will be in a bull market. Okay, so this is the Nasdaq, and on the right side would be the S&P 500. Okay, I think in my last slide already. Okay, so I've spoke at length relating to the US context. So what about in Singapore? So this is just really a summary of what I feel is important for all of you all to know. So in Singapore, when the interest rate is high, Okay, the bond or the T-bill yields will increase. So that one is something positive for us. Okay. What about banks? I mean, for us, if we are a borrower, of course, it's not very good lah. But if you have bought the bank stocks, right, I think you will be smiling away lah to the bank in a sense, right? Okay. When there is a interest rate hike, the CPF interest rate will also increase because that forms a part of the calculation for the CPF interest rate. Okay. But on the other hand, there is an increase in the recession risk if the interest rate is perpetually high for a prolonged period. Why? Very easy. Because businesses will fail. Why businesses will fail? Because of the lack of money. Okay, businesses always will need cash flow. If there's no cash flow, right, and you're sitting on very long-term assets, right, it just doesn't work for the business. They need liquidity and cash flow in order for them to survive. So if there's not enough borrowing, not enough money, the risk of the business failing will be high, and that will contribute to recession risk. Okay, and last but not least, for those who bought REITs, okay, anyone bought REITs here can raise your hand. Okay, Kunli. Okay, Dennis. All right. Yeah. So what happened to the REITs or what happened to your REIT? Can anyone share?
Go
Did it
down
crash?
the price. Yeah, probably at its
Yeah.
bottom now as we speak.
Okay. Yes. Okay. So there. Okay. So if you all remember, the REIT actually crashed when there is a interest rate hike 2-3 years ago, right? So it crashed, went down, went down, went down, and then I think middle of last year it started to warm up because there was an interest rate cut. Okay. But what happened is I thought interest rate cut, right? You see from the chart. Okay. You see the chart here, right? The blue color line. It actually went down, right? From this high. But what happened in recent times for the REITs? What happened? It crashed again, right? Why? Because recently when the US inflation rate announcement came out, right? It actually went up. Okay, inflation went up. And the Trump presidency, where he executed his executive orders imposing tariffs, it is inflationary inducing. Okay, these moves are inflationary inducing. Okay, so a lot of economists and also business analysts are predicting that there will be an increase in inflation. Okay, so why? Because I just want to explain this so that everyone is clear. Tariffs means when things are being imported, they are discouraged, right? Because of the high taxes that you need to pay for the importer. All right. So that's why for Canada, for China or Mexico, if anyone in the US wants to import, they need to pay a lot. So do you want, as a business, do you want to pay a lot of money? No, right? So what you will do is that Trump wants the businesses to buy US products and services. But the question is, can the US produce goods and services that are cheaper than US or Mexico? Sorry, as compared to China and Mexico, do you think US can produce goods that are cheaper than US or Mexico? I don't think so, right? And I believe all of you don't think so as well, right? Because the labor or the workforce in US is simply too expensive. And the raw materials are something that are essential in manufacture or production, right? So basically, what I can say is that if they really turn to their local, as in US, market to buy their own or support their own local goods and services, right? It itself is inflationary inducing way. All right. So I mean, we must be realistic in this world. We need to depend on each other. We must have the interrelationship in terms for economic reasons in order for us to keep ourselves afloat. But if we become more protectionist, uh, this is something that will definitely hurt its people eventually, right? So I mean, it waits to be seen. The forecast or the prediction is that Trump policies are inflationary inducing. Therefore, we are reacting towards the market, right? So in recent times, the S&P and Nasdaq are not doing as well also. It might be because there is an exhaustion from the bull market, which has been running for about 2 years. But I think it's also reacting to the fact that the Trump policies are taking effect. Okay. All right. I think that should be all for my part on the economic indicators and how does it affect the nation, businesses, and yourself. Okay. I will now move on to a quick one. I know it's left with 9 minutes only, right? But I am keen to show you this basic introduction of technical analysis. So if anyone is interested, right, or if you are in front of the, sorry, let me go into my browser. Okay, so I just want to introduce you to this online software, which is called tradingview.com. Okay. Okay, so this particular software is quite powerful. This is a free software. Of course, there's a paid version, which allows you to look at more deeper content in terms of the indicators and more trading indicators that you can look at as well. But it can look across various markets. Okay, so for example, if it's not just restricted to the Singapore market, but other companies like CapitaLand. Yeah. Okay, so if we want to look at CapitaLand, right? This is our Singapore CapitaLand, right? I guess you'll be familiar, right? You can also search as well. Any REITs, maybe let me try. Maple Tree. Okay. Oh, this is not the tree. Yeah, Industrial Trust. Yes, this is the one. Okay, right. So yeah, so basically I just want to recommend for those who are interested to do technical analysis, you can use this online free platform, which is TradingView, but you need to set up your own account in order for you to use their tools. Okay. So for today, I just want to do a simple technique which I want to share with you all, and that is known as the support and resistance. Anyone heard of this before? Support and resistance. Okay, so for support and resistance, right, basically what it does is that we want to know where is the support, which is like, if you think about support, right, it's something that you want to break or you want to be above the support, right? I mean, in terms of stock market, if you have a support line, usually as investors, we want the price to go above the support, right? Because we don't want it to go down. That means to break the support. Okay. Then the other one, which is called the resistance. So resistance means the upper line, right? Or the upper tier. So do we want to break the resistance, or we want to be away from the or below the resistance? We want to break the resistance. Okay. So just remember, for support, we don't want to break the support because we want to go up. Okay, because by breaking the support means the stock price is going down. Okay. When we are hitting resistance, which is the upper band, we want it to break the upper band because it means that the stock price is going up. Okay, clear? Okay, so to illustrate this concept, right? What I want to do is that, okay, I suppose you all are looking at this stock price chart for Mapletree Industrial Trust. I guess this is something familiar to all of you all. Okay. So for technical analysis, it's really quite more of an art than science, because why? I guess we all need to really look at patterns. Okay. So there are several ways to do this in order for us to plot the support and resistance. So for support is remember support is the bottom line or the bottom band, and then the resistance is the upper band. Okay. So there are different ways to look at this. So it really depends on the timeline that we are looking at in order for us to plot the support and resistance line. So very simply, sorry. Very simply looking at this chart, okay, what I can do is that you must click on this in order for you to draw the lines. So basically what I can see is if I can map 3 points, I can easily draw a line, right? So let's say I'm drawing this. Okay. So, sorry, this is the line that I can see. And what is this called? This is called the support. Okay. So this is the support line that we are looking at. Okay, this is a support line. So just remember, in order for you to plot a line, a good line, you must first look at the pattern, okay, based on the timeline that you want to plot, okay. And in order for you to have a meaningful pattern, I would recommend at least 3 bottoms, okay, because you must remember the support line is always the lower band, okay. And you can identify the 3 bottoms, you can easily draw this line already. Okay, so next I want to plot the resistance line. Okay, so how should I plot it? Okay, do you see any major or key peaks that you can draw a line with? Okay, so what I will do is I will draw it this way. Okay, and about like that. Okay, so that's why this is one line that I can draw. Alternatively, you can also draw this line. Okay, so it really depends. Oh, there's no hard and fast rule. It really depends on what you see. Okay, and this will be my resistance. Okay, this is my resistance line. Okay, so what you can see is that this particular, okay, there will be 2 things I want to talk about. So you can see this particular stock price within this resistance and support line. They are moving in the band very nicely. Very beautiful, right? Over here, okay, it goes up, hits the support, and then it goes up, but it didn't reach the resistance. Then some announcement must have happened in 17 November that caused it to go down. Okay, and then what I can see is that there is possibly like a triple bottom before it goes up again to hit the resistance. So remember resistance, you always want to break resistance, right? But what happens here? It goes down. That means they can't break the resistance. There's not enough volume or motivation by the traders or investors to buy this stock in order for it to break this resistance. So you can see across this price chart, the resistance is not being broken. Okay, so this is how you look at the patterns. Another thing is that I want to teach you all is, apart from the peaks, you need to look at the bottoms also. Why? Because the bottoms of previous period, right, of these stock prices can form the resistance. So for example, what you are seeing here is that these bottoms, right, they are the support, right, of this particular period. Right? So these are the bottom, which forms the support. But moving forward retrospectively, what you can see is that, right, the support of the previous period becomes the resistance of the forward period. Okay? Can see that? Okay? I repeat, the support levels from the previous period can become the resistance moving forward. That's how I plot this line. And this is a nice line. There's a bottom, which forms the resistance because of the previous support. And then moving forward, I can also plot the peaks, which will be the resistance line. So this Maple Tree Industrial Trust is moving nicely along this band of resistance and support until what happens? Until this day, 11 Feb, which is 2-3 weeks back. What happens? It broke, okay? It broke the resistance line. Sorry, it broke the support line. Support, okay? It broke the support. So is this good or bad?
Bad.
It's bad. It's bad because it means that this is going downwards, right? So if I am just looking at this like 14 Feb during Valentine's Day, and I see this phenomenon, right? I say, hey, I better sell soon already. Okay, but should you sell or not? Okay, it depends, right? I don't think we want to sell low. We always want to buy low, sell high, right? You should have sold it over at this point, all right, at the resistance level. Okay, so what I'm saying is that for these support and resistance, right, it gives you some indication or some leading indicators for you to start thinking about whether do you want to cash in or cash out. Okay, because okay, for me, right, if I am plotting this chart, right, and before Valentine's Day, right, this break of the support line happens, okay, and if my purchase price is much higher than this, right, I would think if I want to cut loss. Okay, but it really depends on how you want to set your cut loss price. Because for me, rule of thumb is I'm willing to part 10 to 15% of my investment, right? So I would look at the price that I want that I got in, and then if it goes lower than say 10%, right? I will just cut my loss at 10%. Okay, but how I would play this is that, let's say for example 11 Feb didn't happen where there is a break in the support line and it actually went up, right? And then it went up and then it went up, right? So this gives you an indication that it's reaching the resistance. Okay, so now my question to you all is, if the trend is going upwards like that, what should you do? It's reaching the resistance already. And do we like resistance or breaking the resistance? Do we like it? Do we want to break the resistance?
Yes. We want to break the
Yes,
resistance.
we want to break the resistance. So what should you do? There are only two ways. Either you maintain your position.
I'll sell half.
Correct, yes. For me, I will profit first. Okay, profit taking should happen. And because why? Take profit at this level because it is reaching resistance. Because you do not know will it happen in the past three occurrences. All right, what happens when they hit resistance? It came down, right? So do you know or can you predict whether this time round it is the bull is running at sufficient speed to break the resistance or not? You don't know. So what you know is that I can profit take. So you profit take at this position. Okay, that is my recommendation. That is what I will do. Okay, so it's not what you will do, but what I will do. Okay, I will profit take. Okay, and what happens? Then at this inflection point, I will see whether it goes up or down, right? So what if it goes up? What if it goes up? Sorry, maybe not so okay. So the next day it becomes like that. Okay. So next day it becomes like that. Right? So what should you do? Buy more. Because why? This by doing so, right? It means that the price has broken the resistance and is on its way to go up and up and up. Okay, means the bull is strong already if it breaks the resistance. So the upside is more than the downside, right? But is it 100%? No, it's never 100%. What you need to do next is to look at stop loss. Because like what I said, this can be a fake strong bull. It can be a fake one. Because after that, it might turn down. Correct? Right? It might be a fake one. Alright, so it's important for us to always establish a stop loss so that you know that you can call out this fake bull, right? And then it's actually a bear inside, right? So this is something that you can do when you are planning at this point where you have experienced a breakout from the resistance and you are planning what to do. So I would buy, right? Buy, but with a good upside. But I also need to manage my risk. Okay, so trading or investment is all about managing risks. Okay, how do you manage risk is you must establish your stop loss, which is at this point. Okay, so that you are covered behind and then you can go free as you want above. Okay, that is the whole idea. Okay, so that is when you have broken the resistance. So what if at this point it goes the same trend as the three previous occurrences it starts to go down? What should you do? Anyone give me an answer? What should you do if it cannot break the resistance?
Let it confirm by letting it drop longer? Let it fall longer?
Yes. Okay, correct. Let it drop. Okay. So do you buy or not? Because why? You don't. Okay, there's this saying don't catch a
Falling knife.
falling knife. Okay, don't catch a falling knife. Let it drop. Okay, so it might drop. Drop like the previous three occurrences, right? Then drop. Okay, drop here. Okay, then what you should do over here? Already reached the support already. What should you do?
Can add in a position also lah.
Add more positions. Why? Because in the past 3 occurrences, what happens once they hit the resistance? The support. What happened?
Rebound,
It
after that,
rebounded.
rebounded, yeah.
Yeah, especially this part, they rebounded damn strong. It's like a cliff, you know. It just bomb 2 days, you know, back to the middle already, right? Yeah. So when they hit the support, buy. Okay, buy. But remember, this might not turn out well. Why? Because it might end up to be like that. So what happens? Going back to 11 Feb, okay, before Valentine's Day, if not, no money to buy the bouquet of roses. So 11 Feb happens to break the support. Okay, what happened on 12? What will you do? You bought on the 11, okay, sorry. You bought at 11 out on 11 Feb. What should you do when you buy? You should exercise the stop loss, right? Right? Because what it means is that maybe at the end of 11 Feb, it has already reached the support. So on 12 Feb, when the market opens, it starts to drop. You would have already exercised your stop loss, which is like 10% of this, right? So basically, if it's down 20 cents, it will exit out already. All right, so you will lose only that 20 cent. But if you don't exercise your stop loss and you just continue to buy, I don't know whether this is going to go down or not, right? Yeah. So that is some of the thoughts if we are just looking at this time period. But of course, you can further analyze a bit more because we are just looking at this period. But if you want to have more indicators of whether you should hold your position over here or not to exercise your stop loss, you can, but you need to plot more lines more, perhaps like that, because you want to see right? You want to see something like that, right? Because why? The previous periods of the peaks can be your support, right? You can try to do this right? 3 lines like that. Okay, an indication. So what does this mean? It means there's still some room to go down, correct? So this is another indication that you can say, oh, once it reaches here, you buy more, you add more position, right? But you can further analyze again lah. But okay, so I tell you, over analysis will cause paralysis, right? So what I would suggest you to do is don't over analyze. Always look at the support and resistance lines to give you an indication when it is reaching the point of support, buy in so that you can wait for rebound, right? Rebound means the price will go higher, so you can exit, right? Once you hit resistance, okay, you can profit take a bit, or you can fully do your profit taking and then add more positions when it goes up. But always have a stop loss because it might be a fake bull, right? Or it might be a fake bear at the bottom, right? And you always want to have a higher likelihood of upside rather than downside, right? So always remember that, okay? So if it breaks support, okay, you can see if you want to add position, because nearing support I would add position, but I would always add that cut loss because I do not want, I only can afford to lose that 10%. I don't want to lose more than that, right? When you are at the support. At the resistance, when nearing that, I would profit take, right? But when it crosses the resistance, in order for me to catch the potential upside, I will add positions, but always have a stop loss just to guard against a fake bull. All right. I know it's 2:15 already. I probably want to end over here. Okay. At this point in time, any questions that I can take for today on a support and resistance? Okay, if there is no question, I just want to let you all know for the next session, I'm planning to talk more about technical analysis by sharing more indicators like things like MACD. Okay, not McDonald's, it's MACD, moving averages, cumulative distribution. Okay, so MACD, I will talk about Bollinger Bands. I would also talk about relative strength index or stochastics. Okay, yeah. So there are some indicators which I usually use for my technical analysis. Okay. Um. Yeah. So if you all are interested, you all can join in the next session. And another thing about technical analysis is that I think previously I spoke about fundamental analysis. Fundamental analysis is really looking at the strength of the companies themselves. So that means fundamentals. Technical analysis comes in useful for people like us because we want to find the right price entry point. Okay, I repeat. Technical analysis is useful for us to find the right price entry point. Okay, price entry point. This is very important because why? We want to buy low, sell high, right? And that can only happen if we enter at the right price.